Welcome everyone to the Kendall Report. Having issues with my having issues with lighting in my studio here, so apologize. I had the same issue going live last night. Welcome. This is some folks are going to be disappointed as I'm not going to be talking at all about the markets. This is really focused on the WaveTech Portfolio Management tool. I haven't really talked about this product a lot, but when we get crushed like this, there's an opportunity. We've seen if we go to January, anyway, coming into the beginning of this year, we actually have seen where the market was up 52.5%. Now we're in a correction. Who knows what you want to call what we're in right now, but the point is that when our database resets at these levels, it tells you it's basically like those old school people like us, the etch a sketch where you could draw on the thing and shake it and clean it out. This is a complete blank sheet of paper that we've been given, and that's a good thing. So the key in making money going forward here is going to be actually, figuring out where the rotations, what's going to come back into play. So how do you do that? You can sit around and think about fundamentals and what type of things you think are going to happen. But what you really want is a monitor of the entire market. And that's what we'll be talking about today. The WaveTech encompasses pretty much the whole market. It's got 14,700 symbols in it. And it puts buys and sells and has metrics and history and track records and on every symbol in the database. So this is this is what we're going to be doing today. So unfortunately, if you're going to ask me questions about the markets, I'm not going to answer. I'm going to focus. This is going to be a 1-hour presentation. I'm going to get into it here in just a minute, but this is going to be how to participate going forward. And I know we're seeing this crazy volatility right now that we've seen this week has just been amazing, with the order book being blown up, everything that's happened. But this is about focusing in, and I'm going to go through this presentation. At the end, I will take a few questions, but my goal is to use these. This is the plan going forward with WaveTech. I'm hoping that I have an opportunity to do at least one, maybe two videos next week. And I'm going to stair-step, basically a course. My goal is to pull down these videos, edit them up, clean them up a little bit, and then repost them in a playlist that can be used for people that are getting this product. And we'll go through everything, but it's for the money that it costs. I think it's $3.80 a day, $97 a month. You can get the entire platform for a year for I think $667. We got a deep discount if you just pay up for a year, so it's like a 40% discount almost. But what it's going to do is give you eyeballs on 14,000 symbols, and you can build watch lists, all kinds of things. So my goal is over the next, and it's actually going to be the next several weeks, is I'm going to start talking about a number of things, not just the product, but portfolio management, concepts, philosophies, things that have grown up. Most of you know me as the day trader, the ex-floor trader, but I've spent over 25, almost 30 years plus of working with portfolio managers and portfolio management techniques. And there's, just like everything, there's good and bad out there. This old legacy product that I'm going to show you in a minute, don't be deceived by its looks. And the other thing that I'm planning on doing during this series is bringing in some artificial intelligence using primarily Claude. I'm a big Claude fan with Anthropic. It just seems to for certain types of processes, that is the place to be. And so that is my plan to ultimately bring this in. I'll see where it goes today, but this is going to be more introductory. I will talk a broad stroke. We'll go through the product, and just go through the step by step. What I want you to do is come out of this and understand what this product does and what it doesn't do, and that's step one. Next week I'll actually go through the basics. Some of this stuff, if you want to actually research more, you can go to our portfolioexpert.com website and go to support, and there's videos there on both our Portfolio Expert product as well as the WaveTech product, and you can see some of the techniques there. But I'm going to build a much different thought process. We did this back in the pandemic. We literally had thousands of folks on the system, and life unfolds. I've had a lot of personal issues with my wife's health over the last several years, actually, so it's been very distracting. But going back to the pandemic days, we were able to do some amazing stuff. Those of you who've been around for a while remember the Buffett trade, which was, we made 100% using the Portfolio Manager as a tool to capture what I believe was a major opportunity in airlines in the pandemic. There was no way they were going to let the airlines go out of business, and Warren Buffett sold his airline stocks because he couldn't get a special deal. He's like a little whiner, like he always is, but he's always getting special deals on like the Goldman Sachs bonds. I could go on all the way back into the 80s showing how Buffett, Buffett's coined, I'm doing as this great investor. It's pretty easy to make money when the government's backing up a lot of your trades and you've got inside information. So, but what happened then was we were able to use this tool I'm about to show you as a tool to capture a very specific industry group. So one of the things that I hope to develop over the next several weeks and doing this series is that you're going to be able to take this tool and formulate different types of ideas that you may have, and it doesn't have to be like a specific sector. It can be multiple levels of where you blend, where you have like a strategy. You have maybe three sleeves where you like AI and you like some, you have three different sectors or groups, or even a barrage of just broad ideas that you think what stocks are going to be in play and all that stuff. This is for stocks. You can use it for ETFs. It will work for ETFs, but it goes to one of my mentors. If you want to make money, trade individual stocks. There's a lot of money, especially in 2025, the amount of movement and things that we see here. If you can get some structure around your ideas, you can make a lot of money. So that's our introduction. I've got a PowerPoint that I'm going to go through because I want to be very focused and guided on this. I'm probably not going to look at a lot of somebody just gave me $10 for the Buffett comment. But listen, I appreciate it. I'm going to stay. I probably should even turn off so I can't see the comments at the moment. But I'm not going to be interacting with you until I get through this PowerPoint, and I've got a lot to do here in like 50 minutes. So let's go ahead and let's get into this presentation. So this is going to be the 101 introduction. I went through about 15 different iterations on how I was going to present this tool to you today. And the unbelievable. I didn't even know that thing worked anymore.
Bob Kendall, how you doing?
I'm so sorry. my Skype was on. That was classic. Okay. God. Bear with me. I'll be right back. I don't even get calls on this thing, and I'm getting calls on it. So hang on one second. I'm trying to kill this thing. All right, folks. I really apologize for that. I haven't had a call on that was a Skype call for months. So of course it would happen right now. Anyway, so getting back into the flow here is that the the portfolio manager that I'm about to walk you through, it came out of interesting kind of viewpoint of what was happening to me back in probably mid 1993 or 4. So just a very quick history is there was something was going on back in the day. There was Fidelity had a bunch of these sector funds that they're running, and they used to give you they used to update the constituent list every 30 days, like real time. And there was a whole bunch of us, like tens and thousands probably of investors out there, and we were front running the funds. They were telling us what they were doing, and then we'd go in and do our analysis on the constituent list. We'd look at whether the sector was hot, and then we would pile in. But during that period of time, I realized something, that if you looked at the Fidelity managers list, there were a bunch of kids out of graduate school. They all had graduate degrees, they all had great education, but they'd never traded the markets. Meanwhile, I'm going to air quote this, they were the primary manager on the fund. And what I realized was these guys didn't have the skills to do that, so they must have had some kind of automated service, or behind the scenes, the man behind the curtain was helping to generate these ideas and the weightings and all that stuff. But it made me realize that there was really mostly an automated process that was happening. And this was 1990, I'm going to go 1992, 1993 at that time. And it was in 1994 that I started building this process. I thought I already had I had models for buy and sell, but I didn't have models for how much to buy and sell. So how to balance out the portfolio and why they were. So we started this research, and I'd love to see my old partner that helped me build this. I'd love to see David come up. I'd actually love to have David come out, and he and I do kind of a podcast about some of the stuff that we did back in the day, which is now 33 years ago. But the point is that what we figured out was we had buy-sell models. We just didn't know how much to buy and sell of each thing. So we started building the concepts and the foundation of a portfolio management system that would be completely automated. We ended up calling this thing, right now I refer to it as WaveTech. We kind of morphed the name into an older service that came out in 1994 of mine, which is the indicators and all of that. But it was called the Virtual Portfolio Manager. And the Virtual Portfolio Manager was a construct of all of the buy-sells, but also into a portfolio management concept. And that developed, we spent about a year just developing the allocation system. I would say it was actually 1998 through 99, maybe mid 97. And we started to build this allocation model. And turns out this allocation model ends up to be pretty brilliant after watching it for 30 years, using it on we've estimated we've run about $275 billion through this process, through this clunky old piece of software I'm about to show you. And there's it's interesting because it's all technical TA quantitative stuff that I did in the modeling, brought into the next level is how much to buy and sell and how to allocate assets when we have more ideas. So I'm hoping that as I go through this presentation, I'll be able to show you a little bit about the thought process and then hopefully at the end we can talk about some techniques and things just to set up the next version. The next, probably the next thing that I'm going to do from the standpoint of the videos will probably go all the way down to ground zero and teaching how to use the product. So it's going to take a little bit of patience. My plan is, like I said, to take these videos, definitely with the phone call in the middle. I'll have to edit that out, but I'm going to download these, edit them, clean them up, and get some nice clean presentations and put them into a playlist. So let's go to the next. One more thing here. So got disrupted there a little bit, but let's talk about master markets with systematic precision. I have a slogan. Those of you who've been around for a while, you've heard it, but you're going to see it now, which is process over attitude and opinion. So you have to have a process. Some people would call that a trading plan. And then the tagline on that is attitudes and opinions keep you in when you should be out and out when you should be in. So if you have a systematic approach, you've got models, you've got portfolio management techniques and protection techniques. If you go out and Google advance and protect, that is a theory that I developed during these times in 97, 98, maybe early 2000. And what that means is you want to participate when appropriate and you want to protect when necessary. And you folks, everybody that watches this channel sees me talk every day and show you the WaveTech database and what the rotation is. And it's a great tool for identifying trend changes as well as continuation of trends. And so I guess another advantage, there's a lot of things that you can do with this product to help you in your managing of your money. My goal with this product is really to help people get out of speculating, and I love trading indexes, don't get me wrong, but trading indexes and managing money is a much different thing. And I think as we go through this series, I don't know how long it goes. This may be like a new thing for me, at least once a week down the road. I'm not sure what the development of this is going to be because this is the first video of this sort. But I do know this, that everybody will gain a lot, not only in philosophical values from the standpoint of how portfolios work, but also in other techniques that are going to help you with your investing. And I believe, I came from the world, just real quick to kind of lock this in, I came from the world of where us brokers, when I was working at a brokerage firm, had all of the information. So if you wanted information, you had to call us. There were some newsletters and some basic background stuff that was around, but the brokerage firms owned all of the information. They had control of everything. And so that's why you had to pay brokers. I remember, when it was some crazy numbers were to buy, 100 shares of IBM Big Blue was a thing back in the early 70s and late 70s and early 80s. And, it might cost you for, $140 to $200 just to buy and $140, $200 to sell 100 shares of IBM. It had nothing to do with the pricing or anything. It was terrible. It was very expensive. So, but we had all the information. So we transformed, if we come into today, where the playing field is completely level. Everybody has access to pretty much everything. There are some things, maybe, shops like mine and others that are doing quant work that have a lot of internal processes that are going on. But for the most part, we all can get the same information, same time, same second. We can do it whether we're on our phones or whether we're wherever we are, right? So we can do that. So let's go ahead and see what I put together last night. So I already covered all this. Got it. This is typical, or already covered this. So let's talk about a couple concepts. And one of the concepts is this is the problem with discretionary trading. Anybody's been in my old live trading rooms around trading, I say it all the time, but discretionary trading, that is the looking at charts and indicators and deciding what type of trade to do or put it, how much size, all that is discretionary and random at a very, very large degree. So uh, that's the hardest thing that you're ever going to do from the standpoint of being involved in the markets. And the probability of failure is probably 90%. You always hear, only 10%. It's probably closer to 5% of people are consistent and making money. Why is it? Because of all the emotions and everything that was going on. I had the opportunity, if you've read any of the old, some of the old books on the market gurus and stuff, I had the opportunity to hang out with some people in the Bay Area, but we did it up in Tahoe many years ago, and we were all sharing our ideas. And that meeting, which was a fairly high level meeting from at least the thinkers that were at that meeting, I was honored to be involved. There was a guy named Ed Sakota was hosting the meeting at his house in Lake Tahoe, but what came out of that was the realization how different and how random. There were 10 of us at this meeting, and we all made presentations. We worked the whole weekend, and it was very revealing to me. And this is where it's interesting. All of us have a path. I'm in the process of writing a book right now that I'm hoping to be out in the next couple months. We'll see how it goes. Seems to be flowing pretty good. But the point of the evolution of all of us is the things that we get exposed to, the type of decisions we made, good, bad, and ugly sometimes, right? We make all these decisions. Those formulate who we become as a trader, or maybe the path out the door to never trade again. There's a lot of the markets are totally unforgiving. They don't care about anybody. They just spit you out. I made a comment. I think it was in a Twitter feed or something. But be careful about. It was in a YouTube comment that I was responding to. Be careful about talking about your trades too much to other people, especially bragging. One of my old buddies, Artie, on the Pacific Options Exchange in 1992-ish or so, used to always say, never celebrate a trade. If you have a trade on and you're going, wow, look at me, he goes, you better be celebrating only with the SELL, not a C in front. So you better be, if you're celebrating, saying, look how good I am and how much money I'm making, you better be getting out, because the market gods are watching. And it's a psychological backdrop that we're always trying to get. So the whole idea of systematic automated trading is to get you and me out of this. I felt the necessary movement. I think it was 1993 that Dave and I got together, and I wanted to automate the entire system because of this stuff I was talking about that I felt was going on with Fidelity and the sector funds. And the result of this was, we need to put a set of rules together. We got the buy sell rules, but we need to put a set of rules on how to allocate the money, and there's a whole bunch of concepts. So over the next several weeks and through this series, like I said, I don't have it right now is open-ended. There's a lot of things I'm doing right now with writing the book, very deep into. My plan is I will be showing you how to use this platform along with AI, and it could be Claude, or it could be ChatGPT, but I'm going to show you how to do techniques that will allow you to think beyond what you know. That the beauty of the AI is just amazing. So there'll be a whole segment just on using this product with AI. All right, so let's just keep going down the list here because I want to get to this. Yeah, so a lot of this stuff is just going to be things I've already discussed. So a couple things. VPM avoids risky and low probability trades. Every one of, you'll see here in a minute, but every symbol in our database, all 14,700 and change, all have what I call a statistical map. They know every trade that's ever been suggested by the model, so 100% transparency. It shows you the good, bad, and the ugly. And all of these models have good, bad, and the ugly. But there's a statistical map that gives you ideas about holding periods. And these are things I talk about every day in the channel when I'm looking at the WaveTech database. Well, WaveTech database gets granular, and you can go down to individual symbols. And all of these metrics flow out of there. And I will show you down the road how to take all those metrics and start to break them down and have AI look at the trading flow, everything. I've done I've got a whole backdrop of work that I've done here and just asking questions that I've been wanting to know, being the creator of this process, that I've been wanting to ask for a long time. And there was a point in time, like before ChatGPT came out a couple of years ago, that doing these type of analytics was a big deal. I mean, you had to be really good even with databases, with SQL or Excel. You're trying to crunch all these numbers. Now it's as simple as a prompt almost. Some of these prompts need to be engineered a little heavier, but for the most part, it's asked a question. And I always say that, a lot of getting through life is making sure you're asking the right questions. A lot of people ask the wrong questions. And so my point is that this whole series is going to evolve. I hope everybody really enjoys it. I didn't expect to get a lot of real-time views like on a normal broadcast, but I appreciate everybody that's showing up here. Yeah, I lived in Tahoe for a while as well. Somebody's going, Tahoe is nice. So this is where we'll start to talk about the modeling and what's going on and the process. And this says only predefined trend conditions trigger action. So what the models themselves are those actions. So I've been talking about in the last several videos, and this is my first full week back to work, so to speak. I've had Sunday through Thursday, we had live videos every night. And one of the things that I talk about a lot is having structure in the markets, and you have to have structure. Well, the models are looking for that structure. I've given it all of the information it needs. There's about 60 rules in the models, and there's, I think, 600 variables that were considered and boiling it down to the decisions that it made. And so we run something like 10.5 million calculations every night in WaveTech on that list of 14,700 symbols. The numbers go pretty exponential quickly because there's a lot of variables. But all of these things are looked at. You and I can't do this, and especially we can't do it on, if we're going to be a discretionary trader, how many symbols can you watch at the same time and be assured that you've considered everything on them? And it's not very many. It's maybe 3 or 5. One of the things that I talk a lot, you want to create kind of your own trading pit, because I used to work in trading pits, and guess what? When you went in a trading pit, you traded that stock or that future or whatever it was that you were in, and you didn't get to trade 2 pits over. You traded your pit, and so the focus, the blinders on, and when you put the blinders on and you're seriously focused, there's only so many that you and I as humans, depending on the techniques, you could probably do more, but the more intricate that your trade plan gets, the fewer items that you're going to be able to track, because there's too many variables to stay on top of. And so this is the purpose. I realized this back in, I guess it was 94 when we built the first prototype for VPM, which is a virtual portfolio manager. But realize there's no way that we're going to be able to do, that many variables on very many items. So how do we start to automate? How do we start to consolidate this? And I'm going to go in as we go through this presentation. And one of the things I want to talk about is dynamics of portfolios versus speculating on an index or individual stock. So we'll continue down this list here. So you already heard all this. The one thing I will go through here in a minute is this dynamic allocation theory. This was the brilliant thing that I talked about when we first started, and that will be that'll be good. So let's take a look at this is the other thing. I already mentioned some of these things. So as my flow of consciousness is coming, this basically is all the things that I wanted to tell you here. But every trade and market condition is documented. And I'll show you in the software here in a minute. But what it's doing is and you have to realize this logic that's in there that was built, it literally goes back to the grassroots days or the beginning in 1984. And as technology has evolved over the years, I have evolved with it. And this is a testimony to even Bob Kendall, almost 73 years old, is still evolving with the technology, with AI coming into play. I basically, folks, when you get old, you change your focus a lot. Right now, I was telling somebody on a presentation the other day, somebody said, well, I'll get back to you next week on that. And I explained to them, when you're 73, next week is like a year, okay? Because you never know what's going to happen. So, things have to happen at a more higher level as you get older. And you have to, if you waste time is always the enemy. When you get at my age, you have no time. It's a 2-minute warning and 2-minute process, like in a football game, right? You want to go straight into, no huddle. You're in no huddle mode. So, but the point is, every condition and trade and everything is documented, showing the full transparency of every trade. There's something called the efficient ratio, which is the ER ratio. I will talk about that in a minute. Basically, looks at the metrics, broad metrics. What's really cool, and I will show you in this series, is how to take those metrics and go to a whole next level and dump this stuff into AI and really dig into some of the characteristics of these trading models. And even though the same trading model is being applied to, we have 2 models right now that we use, even though the same model is being applied to each one, the stock, we actually we run those 2 models on every stock, both daily and weekly. So there's basically 4. Everything's being updated every day, and on the weekly it's updated once a month. Like today's Friday, so we will be updating our intermediate models tonight. But as all that happens, all the documentation's happening. When I show you some of the stuff that I've done with AI to validate these models at the next level, it's going to help. One of the keys is the matching of your ideas with the right models, with the right stock. There's much more to it. So what I've done is I've automated the process. And my plan is, with the AI, and this is what I'm working on right now, is being able to just take a list of stocks, and we've got a very large database that you folks never see. And matter of fact, it's kind of in the back room that we've developed over probably the last 12 years, but it's insane amount of data, and it's a gold mine. I've always referred to it as my gold mine, and one day we're going to start the mining of that, and that's part of where I'm going to ultimately. But what we have right now with the stats that are coming out of the models, we can take that stuff, and like I said, I don't know when that video will happen, but it's going to happen fairly soon, because I think I'm also going to start another video series. I'm kind of changing my content on my channel just to start to bring out some really good deals. Somebody said, "Hey, Bob, teach us how to fish. Don't fish for us." But this is nice because the fishing is also it's an automated fishing boat, so you'll be able to eat off of this thing. So I covered all this. Yeah. So when I on this, there's always three trade locations. There's entry, there's the entry price, participation, which is the events that happen between the point where you buy and sell. There's a constant analysis that has to go on. In the case of if you're running this software and you have it on a weekly set up for a intermediate or weekly basis, so once a week it goes and looks at all the data and say, hey, should I continue to own this? If I don't own it, should I buy it? All of those considerations are happening, and it never gets tired. One of the funniest things when we were developing this process, we had an associate that was involved, and Dave said to him, well, isn't that going to be a lot of work? He goes, Dave, it's a computer. It doesn't care. So, it doesn't matter. And in the world we live in now, like I said, technology has gone so far. I mean, it's insane what we're seeing right now, folks. And for someone who's been a quant, been involved in market data for decades and watched this thing evolve, and I had a computer with DOS 1.2. I had an Apple II in 1980 was my first real kind of, we'll call it consumer product that I used. And I went from that to the evolutions of the IBM XT and all. I've been through everything, every iteration of OS that you can imagine. Okay. So, but the point here is that what we're doing here is looking for these different elements, and this is what I'm describing to you. So we have targets that we develop in here. So you'll see in a minute where it's going to tell you what the normal trade makes. It sets up a profile. So one of the things I preached about in trading forever is you have to have an entry point, but you have to have an expectation. Why am I risking any money on this? And you need to validate these trades with as much reality as you can, meaning, do I have techniques? Why is this stock going to be there? It could be fundamental. I think they're going to make more money, whatever. It can be that. But you have to have that to buy something and to put at risk. You need to have further ideas and concepts developed to be able to participate in that market. And so most people don't. It's a hunch. I like this stock. I think the market's going up. It's too much thinking and no real material expectations built. And that's why when I started building this platform, this is what I was trying to get. So you want to be involved in strong trends. So any signal that comes out of this system I'm about to show you is going to be, let's say, is going to have high probabilities of appreciation. So it's a long only process that's in here right now. We started building the shorts and it just never, the issue that we had, the people that were going to be using this product, the idea of doing short selling, we were primarily working with retail managers that were buy only. So we never developed the short side. So, but all of these trades that are coming out have high probability of appreciation. Now, what's happening? Just like there's a process happening, every new data point, whether it's weekly or daily, is looking at it and going, "Is this good? Is it still good? Are these metrics good?" And so this is a form of artificial intelligence, and I think I have I have a screen on this, so let me just go to next here. Yeah, let's just stay here for this. But you're always trying to, like I said, determine some type of probability, which that's what the probability map is doing. So it's built into the logic that is ultimately helping to make decisions. Now, let's just talk about individual trades real quick. I'm going all full on. I'm looking at 44 minutes into this already. So I may run over. I'm going to keep this going until I complete the thoughts that are in here. And I do want to bring up the product so it's just not all abstract for those of you that have taken the time to hang out with me here. But the whole idea and concept, let's go ahead to this next page, is to detect the trends. So this is the steps. Cash is a position. This is something I've been teaching investment managers for years. I was actually really excited at first when we first really met Kathy Wood back in the day, back in 2000, when all the meme stocks and everything was going crazy, and Kathy was on top of the world from the performance standpoint. But one of the things that I saw in her offering was I think she could go to like 50% cash or something. Well, she never does. She just keeps, doubling down, doubling down, doubling down. But I was excited because it felt like it was a match for me from the standpoint of realizing that one of the concepts that we have used for years is changing the beta or the participation of your portfolio relative to market performance by adding cash or raising cash and lowering exposure in the markets. And that's what this product is doing. And that's really key to understand. So one, we got to find the trend. Is there a trend? If there is one, how do we participate? We like to try to find them at, obviously at the very beginning of the trend if possible. But oftentimes and this will be covered at one of the future videos here, is there's three different types of entry. The one that's coming out of a base. There's one that's basically out of the base, starting to trend and starting what I call it's kind of like the breakout trade. And then there's a third one, which I used to joke and call it the Jim Cramer trade, is buy high, sell higher. Okay. But that trade only comes in probably about 20% of the time, and its probabilities are a bit lower. Most of the trades are type 1 or 2. Type 3 trade is kind of the funny thing, and you have to realize this came out of, that's probably a comment of 20 years ago, the Cramer trade, right? So, Jim Cramer's trades are buy as high as you can and hope it keeps going higher. Yeah, so just look at that's funny. Somebody says they still have their compact portable. That's yeah. Boy, so one of the things I wish I could put together, folks, and like I said, I'm trying to kind of a barrage of Bob Kindle stuff, but I would love to put some podcasts together because one of the things, I have some great stories about the beginning of the portable computers. I lived right outside of Silicon Valley at the time and was privy to some inside information on a couple of things that happened. They're great stories. That just triggered me. I haven't even thought of it. That stuff's running through my head right now. I don't have it, but my son has it. I had an Apple II, and he loved the little helicopter game that was on the Apple II with the green monochrome screen. So he has that. So let's continue the process here. So we have cash as a position, meaning we can change our relative risk by adding cash. That's the case right now. I've been telling you folks, we're 40% in cash in a lot of portfolios that we're running at the moment. And even that, with this big drop, you get to the volatility level that we have right now. And, there's no, other than being out before this happened, there's no way to avoid any risk at all, but it's definitely lowered the risk in most cases. Our typical statement about controlling risk in a portfolio on this process is we reduce the down volatility by at least 50%, usually 40 to 50%, and we participate in about 80 to 90% of the trend. So our capture rate on the upside is pretty good, and our avoiding risk is taking like half of the numbers out. If you do a quick equation and you do that enough times down the road in a portfolio sequence, then you're going to end up winning, okay? And this takes me to the point that I want to make, is that the reason why it's good to have a portfolio, because you have a lot of elements that can make you money. Some are going to be making money, some take away, and then they rotate in. And any portfolio manager that you have to, I probably have to do a focus video to bring in the true concepts of understanding the ebbs and flows of the portfolio. We used to do a bunch of scatter graphs showing, what trades you put on added the most value in any given time, and what was captured, and all, our reallocation trades. So we had a way to look at this thing much bigger. And that's one of the elements that I'm going to be working on with some AI stuff that I'm working on right now to identify and to better articulate what's going on during those periods. So as we look here, there's a concept I've just highlighted this. One of the keys to using this product is you need not only to have a set of stocks, but you need to be able to update the stocks and the constituent list and all those type of things. So that will probably be an entire show just on how to update your constituent list, frequency to do it. There's a lot of things, and I have to tell you, and this just brings up a thought. There's going to be a lot of little tidbits in these presentations I'm doing that will focus out. But one of the things, the more that you and I take things in and out of this product, otherwise we add constituent lists. Oh, I don't like that stock, I'll take it out. I'll put this one in, and there's a right way to do it. So what you build here will actually walk forward your entire list of stocks, when things were active, when they weren't active, and a whole history that you'll build doing that. But the more that you try to change, we found frequency does not equal profits or alpha. So otherwise, there's the right frequency, typically 3 months to 6 months. In some cases, depending on the strategy, annual reviews of the constituent list. The larger list, probably more of an annual list, but you can still do quarterly reviews. And this is one of the things that I've used AI for, and where I'm most excited is I've got the AI analyzing the current constituent list and identifying which symbols need to be considered for replacement. And that's always been the hard part of using this product. And, I've spent a lot of time with investment managers over the years talking about that concept in itself. So now we don't have to be as sharp, or we can still be as diligent by using AI to ask this analysis. And once again, asking the right question the right way. Anybody that's used ChatGPT or Claude knows that the prompts are everything. And that's why there's prompt engineers and Perplexity and different products like that coming out, so that you don't have to do some of this stuff. But the more you engineered, those of you that have seen my data sheets that I put out in my Substack newsletter every day, those data sheets were developed to do the analysis that I do as far as what metrics on the PPMs and different things are important, and that's still work in progress. They're not done. I've noticed in the last week or so, there's a couple elements that I'm doing a side job on trying to improve that. So everything, the beauty of the world we live in now is you can ask anything and find out a lot of questions about that. So what's the biggest, last thing here, I'll talk about number 5, is the biggest thing that we have to do is decide when to get out of a trade, right? Taking profits. I mean, how many of us are, I had an amazing short trade on last night, and while I was working on a newsletter, so I was a little distracted, but I had the perfect short trade on, dang near at the top of the particular run, and it went from positive 0.75% at that time down to almost -1, and I caught a decent section, but I was working, so I look back and I look over my trading screen's off to my left here, and I'm like, oh man, I left that one on the table. But I realized that, I was distracted, so I couldn't get on myself too hard. But this participate and exit is really just a general concept, right? But the exit is everything. So right now, the way the exits are done, everything that's in this model right now are things that were developed literally from 1984 through, we're going to say 94 to 96 was these models solidified, we'll call it, and have not changed a lot. The thing that's good is, I don't even know if I'm going to get to the product today. This is unfortunate, just because I would have to go for a couple hours. I'm afraid if I bring up too much, I'm going to show you the product, but I promise you that there will be something early next week. I'm hoping for 2 of these. I'm going to do my best to do them intraday, because that's the time I'm going to have. I'm still planning on being around for the 8 p.m. Eastern time meetings every night. There's just a lot going on right now. So yeah, it's funny. I'm just looking at a comment. 3,700 paid for a Mac, but not the dot matrix printer, and Apple instead. Yeah, that's funny. Yeah, I had just as a side comment, part of my parts of trying to automate the system, there was an old technical product around called CompuTrack. I tried looking up a guy, Tim Slater. I've known Tim. I haven't talked to him in decades. But CompuTrack gave you the ability to automate the print job. So you could queue up a bunch of charts, and it would take whatever indicator, you could set up the indicators, and it was pretty sophisticated for a time. This is 1983, 84. And we could run the charts. So I had an Epson printer, and I had these little guideline. I had things pasted on the printer so the paper wouldn't jam up, and then make sure it folded down on the floor. But it literally had an 8-hour run, and I would print out every market, all kinds of metrics. And I'd walk in and go through my charts every morning. So it was still, you could bring them up on the screen, but I just wanted, and I can make notes on them. That's my daily routine. And I used to be a head financial analyst at a pretty large firm, and I would go through all that stuff every morning. Then I would come up on a Squawk Box, which was this talking thing, and tell everybody what I was seeing and what trades were around or whatever, to like 5,000 guys every morning. But that dot matrix, so that triggered me. I better not look at this line anymore. Let's go through a couple more screens and try to get through this. Yeah, I think I've talked about this. I really haven't touched on, and I'm not going to try to do it. this reallocation trade, and is actually the technique we call it the dynamic allocation theory, and it's built into the software. What it does, it actually accelerates the growth of capital. Otherwise, the returns, it has a really unique way of allocating trades, and it only happens in very strong markets. And it's like the moment, it's sort of like the momentum is all in the stage of things. So you can actually build this thing will multiply and accelerate the growth of the equity, which is what we want, right? And when that cycle's over, then it usually goes to protect or starts to add cash back in and do those type of things. So there's a lot of techniques that are out there that are built in here that are going to achieve those things. Execution, yeah. So this is going to be big. I suspect virtually every slide that I have here will end up being a presentation at some stage. And that will be most likely what happens here. So maybe there's 10 or 12 meetings. I'm going to try to do 2 a week. So we're looking at 6 weeks to get through this. And then ultimately the editing, and then there'll be playlists on the channel just for some of these concepts as well. I'm most interested in going through some of the AI techniques, both with this product and using TradingView and other platforms to be able to do things. So let's go ahead and, so basically all of the portfolios here, I'll highlight this, are hypothetical, meaning that it's not real money, right? But it simulates, the model simulates and tells you exactly when to buy, how much to buy, percentage, and when to sell. So it does every aspect, not only the buy-sell signal, but the allocation amount. And what I've been trying to emphasize as I went through this presentation today is the allocation amount is really, really big, both on as far as participating when these stocks are beginning, and then continuing to, and then to how to scale back out or exit outright of these trades, and then the dynamics of the portfolios. You get new coming in, old going out. There's all kinds of flows that happen during different cycles. And like I said, I've done a fair amount of work that with AI to help with some of these rotation phases. So I have to be careful, because every comment like that, I could go down a trail a ways. So I want to stay focused here at the moment. So I'm fixing my spelling while we're going here. But maintain discipline and consistency. We're pretty close to the end of this, and then I will bring up the product, then we'll kind of wind down. But like I said, I will be able to break all this stuff down next week. I believe we'll get in. There's a whole series. I've never done this. I've talked about doing this for 20 years, is really putting a step-by-step process out there. And hopefully I'll be able to take from this series and really boil it down into some real step-by-step manuals, and both written and video, that will help this go. Hope you get to this level. Yeah, there is going to be a promo. Somebody just says, is there a special promo? Yeah, right now we don't do trials on this product, but let me get through this. I'll show you the product, and that's a good question. I'll make sure I answer it. So match the model with custodian. The custodian is your broker, right? And I I am working on some techniques with the models where you can take the models and say, you can cut and paste the positions into Claude. Again, is what my go-to platform. You can, once you get that in there, then if you have your brokerage account, you can paste the actual values versus the model, and you can ask Claude, say, can you help me fix the imbalances, or what is my imbalance? Am I matched well? Or because one of the only thing that makes this product work at all, and I'll say this now, is that you do all the trades, you do all the allocation as instructed, and you will get, if you like when you did the back test. So by the way, this product will back test as many years back as you want. There's a limitation on what's useful, but you can go back to 1980 and run portfolios if you want. But the point is that you can only get the results if you do all the trades in the timing and matching the entries as close as you can. If you start to fudge and go, I don't really like this trade, I don't like that trade, I really like this, so I think I'm going to buy a little more than it tells me because I like this. If you do that, you end up with nothing. You've broken the process. Going back to my original comment that I made earlier, is that process over attitude and opinions. The process is well defined, and it's even defined at another level in the back test that you've done. So if you like what you see, to continue that process, you have to match what it says. And when you get to that level, and I will say this right now, I probably could have said this 15 times since the beginning of this video an hour ago, is you think discretionary trade's hard. Try being disciplined to this thing. And this is where I'm hoping that through AI, through some, this has always been the big challenge. As we give this product out to you folks, now retail. We never did retail before 2020, and now we've got the it was the best way to put this. Yeah, now that we've got this platform and exposed at this level, then we're trying to get, I guess, bring in this discipline to everything. I kind of lost my thought there for a minute, but the matching the model with the custodian is key, and if you do that, you have to make sure if you're out of balance, you need to rebalance. I have some old tools I was looking at on our old website that we used for advisors many years ago. I think I can convert these. I think I can go into something like Replit and put in a React module or something where I can build this out. It's awesome that I can say those words out loud, that I can do this, because I've already built some things. So what we'll be able to do is for you to put your positions in, and it will actually do this matching for you. And there's a couple of techniques I've already used on using Claude right now to match up against one of my portfolios and the models. But this is key. This is the only thing, I guess, out of everything I said in the last hour. If you don't follow the process, you can't claim you're using it. And we've seen all kinds of mistakes we'll call them mistakes or missteps within following a process like this. So this thing comes at you hard, and it never quits, because just like I said earlier, the computer doesn't get tired. So when you get into trading with algorithms like this, trading with and allocating and everything, I've seen some videos with somebody putting advertisements, putting money into some model that they have, and they're showing the growth over time. We put 120,000. Look at us now. All that stuff's fine. And one of the things that I hope to achieve is in the backdrop, I'm trying to work on this new platform, which would allow you to authenticate the process and tell the computer, yes, go ahead and do the trades for me. So if I can get you and me out of the middle of this process, so we stop thinking and listening to all the noise that we hear around the markets and not doing trades when they should have, or not getting out of something because we think it's still good. In the end, what I will show you on, I'm not sure what the next video will be on, but there will be at least one next week, possibly two, depending on it, and they will be probably around this time, around 2 p.m. As we go through. So as we go through these different videos, but my plan is to be about an hour. I'm about an hour and 10 right now. So let's look at the last couple screens, and then we'll bring up the product, and we'll close out. I'll look at some of your questions as well. So this is good. We used to say this old trading floor articulate a little bit different. Avoid trades with unresolved corporate actions. So we used to say, don't trade stocks with problems. Don't try to be a hero and figure out they're going to fix it. That's a bad business to be in. There's too many good stocks to chase bad stocks. And this is primarily against stocks. So avoid trades on unresolved corporate issues. They got a bunch of crap going. It's like right now, I've been telling everybody, you want to avoid this market. We're up 1.8% on S&P 5400 here. So we kind of got a sell off yesterday all the way down to 5100. So we're getting these 300-point swings in 24 hours. Crazy. But this is what you want to be careful with, getting involved with too much of the noise in the market. So anyway, let's see. Last screen. Discipline strategy. I've already made this. The goal is, and this is going to the discretionary trading. We're going to bring the product up next, finally. But the discretionary trading is really, really hard. Like I said, following this model is really, really hard because, excuse me, it's a black box to you, but you have, those of you that have bought the indicators, you have kind of an advantage. All the PPMs and a lot of those techniques are built into the software, into the model, but you have the algorithms and you have the machine learning now to kind of look out in the future. And that's one of the things I'm trying to bring in right now, is bring that 2 or 3 bar forecast into the future and try to validate it and maybe get a head start of the trades. I've told everybody that's used, their people around have used this product for decades, that I'm about to show you. And you always look at, boy, I wish we had got out 1 bar ago. I said, I've told those folks, what if we can move the entry point 1 bar to the left and the exit 1 bar to the left? So we could capture a little bit more, because the goal of these models are to try to capture the middle 60, 80% of any trend. And if you have to realize, when we buy, we're predicting, this is what people tell you can't do. And I can argue, not only can't you do it, can you do it? I've been doing it for decades, which is time the market. And, those are just and I saw somebody was arguing they made all kinds of money dollar cost averaging. That's fine. I'm not saying you can't make money. I'm just telling you, you're not going to go buy a hedge fund that's doing dollar cost averaging. Okay. Ray Dalio didn't do dollar cost averaging. So when you get to next level, somebody, I guess they interpreted that I just said there's better ways to handle both the risk of getting in and out and all of that. I did a pretty deep analysis of a strategy last night, and it's interesting when you apply AI and have it look at an entire trade list of maybe 300 trades and start to break down the activity. It's very interesting. Okay, folks, the big reveal. Those of you hung out. I'm just looking at a couple comments here before I. Yeah, so somebody's Ed Force. Yes, let's talk about a couple things here. In fact, let me just let me come on screen for a minute. Let me get the next screen set up for you. I miss being in big trading rooms. Let's go here. Let me get off screen. So this is a portfolio that's out there. Year to date, it's up 1192. But this has got 26 symbols in it. It's got 11. I think this might be the one I was playing with late last night. But you can put your holdings in there. But just know this: if you take your holdings, it doesn't care when you bought them. You can't like track. It's not a portfolio tracker. That's actually that's probably a really good a distinction to make. Let me see. I believe I can move to the other side here. Yeah, so it's not. So it's not a portfolio tracker. You don't put your stocks in. It does tell you when to buy and sell those stocks, but it's not going to track your portfolio. This is literally a model, and it's got this. What I was talking about. You can take the. I won't do this right now, but I will in future videos. But this is all of the buys and sells. You can see it actually had a lot of selling. Yeah, look at this block of selling that came in right about. Yeah, this has been 4-7. I think this is a daily portfolio. So this is a block of selling that's been coming in on this. We bought HMY, AGC, NEM. So this is our all the mining stocks. Okay, let's take a look at this. These are all mining stocks. So the miners. It's interesting that they are kicked in, and they're pretty good from the standpoint of what's going on here. So this is one of the things that you can do with the product is, and I'm going to walk you through some components, and then I'm going to come up for some final comments. And what you're going to have is you can take, this is just mining stocks, right? So if we went through the active stocks here, these are, here's AG First, Majestic Silver, AGI, just all mining stocks. So what we can do, and you can build unlimited portfolios in here. What you can do is you can build these groups of stocks, and this is what I was talking about earlier. You literally can come in here and let's see if I can find these mining stocks. There's so many stocks in this strategy. I'm not gonna find it, but I'm just going. Hang on one second here. Let me just spin. But yeah, so these are all different. What you're looking at here, if you can see, they might be small on your screen, but these are different strategies that are out there. And unfortunately, it's not alphabetical. It comes as you build them. So I'm trying to see if I can find this, so I can just show you a couple elements here. But Bear with me just a little bit more. Yeah, I'm just not gonna find it here, folks. It's too many. I'm trying to look through and feeling the pressure of being live here. But let's just go. Oh, you know what? I know how to do it. I only built the software, right? But anyway, so these are all the metrics. We can look at active stocks. These are open positions that it has right now. Out of 26 symbols right now, it only has these. It looks like this makes sense here. This is a daily strategy, so it's a very aggressive active strategy that is going to be there. So, but you can literally go in on this create modify. Just bear with me 1 second here. There's a bunch of reports here that you can run, and there's all kinds of metrics, which is what I'll be going through in the future. That as far as things that you can look at, different performance metrics, all kinds of stuff here. Like I said, don't be, don't look at this old product and think it's not powerful. It's the engine that runs it is very, very substantial. So let me go back here. But it is kind of interesting that these miners, there was 8 orders for today, and some buy, some sells, and we're looking at 26 symbols, and there were 3, so there were 8 new buys for this morning's opening. And so, but anyway, this gives you the orders the day before you're supposed to buy, not the day you're supposed to buy. So that one of the elements that we did, so everything you would have had orders last night. Let's see, I think they'll still be evident here. Yeah. So these are the orders that came out today. This set of symbols was a buy, and it's telling you this model on dollar amount is giving you the shares, but also giving you the projected percentages to buy. And if we go back 1 page here, you'll see that it's showing you, this is interesting, it made a new high just 4 days ago. So but look at this, got a huge hit. This thing's volatile as it goes, but we get, you can see all the metrics here, which in the future videos, I'm going to break down how to build these strategies, how to maintain them, how to interpret all this stuff on the screen, and ultimately how to take stuff that's on the screen and literally put it in AI. The beauty of this old clunky product, it's in HTML, and it's in, I think I figured out it's HTML like 4.2 or something, but I can highlight what I did here, and I can take and copy what I highlighted. I can bring up Claude, and I can dump the raw text into Claude. I can tell it to take this and build a dashboard. I can take and tell it to make analysis of volatility. Anything I want to know about this data, I can just take this and drop it into in there. All right, I'm motivated to. So let's do this. This is the data sheet that I was telling you about. I'm on a different side of the screen now, so let me move out of the way. But let's just start a new thread, and I'll do this. I'm just going to say, tell me performance and other metrics volatility. And I'm going to dump in that stuff that I just pasted. You'll see all these raw numbers come in. And I'm just going to let Claude do his job. I have no idea what we're going to get out of here, but I'll why does everything break when you, I have to confirm my age. Okay. So here's what came out of this, folks. I'm going to blow this up so you can see it. This is just a simple prompt out of some raw numbers. And it tells us portfolio is currently underinvested, 18.5, appears to be planning a significant shift toward a more aggressive long position strategy. That's because it picked up on the new buys that were on that screen. Number of active positions, performance analysis, looking at patterns, significant month-to-month fluctuations across the years. So it looked at all the data. So this is what I'm saying. This is going to be such a big game changer in using this product, is that now I can ask all kinds of questions about this, maybe questions, things that concern me about how this thing is participating or the volatility, seasonal. It's even, it looks like December performance varies year to year. But you can start to dig into this, and this is my point of what AI is doing for us. What it's going to, when I get through this whole series, you're going to be better than 90% of every paid mutual fund ETF manager that exists. Okay. I used to joke with one of my neighbors. I said, I can make you one of the best portfolio managers. And now with the information and things that we're able to do with AI, and just ask a simple question. And it says, would you like me to examine specific aspects of data in more detail? I mean, I'm telling you folks, this new world we live in is amazing. I'm trying to teach my wife how to use just chat on her phone, right? Said, talk to it. It's like you're talking to the smartest person in the world, and ask it anything, and you can say it any way you want. And if you don't like the answer, you can challenge it. You can do things. I actually have, I've had multiple arguments with ChatGPT. Okay, so it's fun. It's very intellectual because they're coming back at you, and I'm challenging it. It's fascinating. If you haven't had an argument with a LLM, then you haven't had fun yet. But anyway, let's do this, folks. I'm going to come up. This is going to be it for today. We did do almost an hour and 30. My plan is to edit down these videos and I'll get some of the fluff that happened, get rid of the phone call, all that kind of stuff. But just this is the beginning of a series, and I know that there's some people on here hoping for more material on using, but I got to set this up because this is for the broader universe. So I'll look at some of your questions here and see what I have. Yeah, so oversold. I'm just looking at Michael Anthony, near lows, rebound from. Yeah, so what we want to do with that particular stock, like PFE, I guess that's Pfizer, I think it is. I'm not Jim Cramer, so I don't know every symbol. But what you want is not to identify when it's oversold and all. That's trader talk. What you want to identify is when that stock is going to be in a sustainable trend that you can participate in. And one of the things that I will show you in the metrics on WaveTech is it tells you what the a holding period is. Let me just flash back. So I'm gonna I'm gonna bring that up and just give me 1 second here. This is going to be kind of small, but I'll bring it up here. So this is the chart right now. This PFE doesn't have a great trading, but it did have a trade on right here, so we can go and look at the okay, so we can look at this is the whole trade log. So this gives us a history of every trade done all the way, all the way back to 1980. So this is every trade. We can also see all these stats, but what we want to see from this is this thing is last trade was over here around 30. It's out of the trade right now, so it's looking like here there was structure. It looked like it was going to go up, and the pattern broke down, and so it's going to. And this is daily short term, but no, it's weekly. Take that back. So this is the it needs to get some structure here. So basically what I'm trying to say here to you is, yeah, it's fine from a trader standpoint, but what we want to see is when the stock's going to trend upward again. And this was what I was just showing you. There was a segment there, looked like it was going to trend, and conditions, we sold it. Actually, it looks like the day that it collapsed that morning on the open. So all of the trades that come out of the system are done. Let's say if I get an order to sell tonight on the run that comes out tonight, that order is for Monday morning's opening price. So when I show you the database every night, all of those things, what you're looking at is a list of stocks that are to be executed on the next open. So I've seen a lot of trading system, and they said, well, we got a sell signal on the close. Well, what good is that? Because the keyword close. So the market's not open. So they'll say, oh, we sold on the close, and even if it was a short sale, and then the next open, there's slippage between where it closed today and where it's going to open on Monday. So we would get to sell on the close today, we would execute on Monday. So everything that we're showing you in this database and any transaction that happens are executable from the standpoint, meaning that there's no hindsight. Like, oh, well, we told you to sell it to close. Well, you didn't tell me till it was closed. And you'll see a lot of stuff out there. And this is the one last thing I'll close with, is you'll see, I think I mentioned, like I saw this ad on one of my videos, and they're showing this algorithm and how the money grew over time. And this was, anytime I hear this, the antennas go up, which is, we were 80% accurate, okay? Just know, anybody who's taken, any stats 101 class, 80% is not a sustainable number. And even if they were 80%, the chances are they built the model and it was in sample. They got it to work and show everybody, and then they did some sim to run the money. Who knows what's real and what's not anymore. But one of the other things that happen is every bit of data that's coming into this model right now, it's never seen before. There is no form fitting. There's none of that stuff. And like I said, if I could do probably a whole course on developing your own system, some techniques that I used way back This was roughly 1992, 94 when we got to building the models. And I could tell you that we did use some, there was a book out that we read and we did some walk forward stuff. And some of that later really came into play around 1998. But everything here has been not only tested, but tested in the trenches, meaning it's been functional with real money for decades. Okay, so that's the advantage of going on. Yeah, so yeah, Michael Anthony, that's fine. The reason why I became a technician, because I didn't, you know, market sentiment, fundamentals, all of that stuff, that's fine. They're beating revs. No one cares, obviously. They're not beating them well enough. Something else is going on. And that, this stock, I don't have it up on the screen, but, it's a terrible stock. I mean, it's been declining from 60 to 25. Maybe it's going to rebound. But this is one of the things that I said earlier is don't play around with stocks that got, got bad histories and bad things going on. You can find the recoveries, but this will come into play. So you could have this into the model and wait for a buy signal. This is a weekly. You could put it on a shorter term trend and see what it looks like on a daily model. On just it's just plummeting. So it's down what, 10%, 12%. A lot of that's market conditions as well. But anyway, folks, I really appreciate so a couple of questions. I want to keep doing that for a few more minutes here. So would we execute our own orders? Answers yes. My goal is to get an association with a broker-dealer that we can automate. This is a new product. This is an old product, old legacy. So we're going to tell you what to buy. There's actually a CSV file that you can download with all the orders in it. If you have a bunch of them, you can build portfolios. I know we've got the entire S&P 500, every individual stock. So you can manage a very large list of stocks. And some people will do that and use them for, for like a trade list or a watch list. Well, we have the ability to put watch lists, and you can have notes and all kinds of stuff you can do inside the software. You'll see. So hopefully, if you don't have time, I'll get these videos out there to be able for you folks to digest. So today was heavy philosophy introductions. Yeah. Yeah, any customer support here, you're looking at it right now. There are, let's do a couple things. So let's say, I notice I did not try to sell you anything today, but if you did, probably the easiest thing to do, and I'll put this in the description on the replay, is to go to this page here, which is linktr.ee Kindle report, and you can go through. Here's indicators. Here's WaveTech, and there's my Twitter account. Now, Portfolio Expert's not on this list, but I do believe, like I said, there is an annual discount there and all that. So let me do a couple more questions. Yeah, so that's one of the things, Gil, you can do is maybe look at crypto miners and all. That's the beauty. You can do all of that. I'm just looking at a couple comments. Yeah, so comment way up. Todd's been a long time follower, and It's not about making money. It's about managing risk first. Yeah, if you don't, that's why we call it advance and protect, and we call it PPG, participate, protect, and grow. So you want to participate when appropriate, meaning whatever it is you own is trending. You want to protect if it's not, like that PFE stock is vertically down. That one shouldn't be owned. Uh, I, I guess the reason why I went to more of a quant technician, I didn't want to be trying to figure out if these guys are going to make money or not. It was built into the prices. So I kind of just went that route in my life. Yeah, so you can't, that's why it's so important to protect the downside. And I know the folks that are the dollar cost averaging people, that, maybe you got a good mutual fund, if that's even a thing anymore. I don't even think TradingView has any mutual funds on the platform, but ETFs, and you're going to long term buy those things. Who knows? Maybe the BlackRocks, maybe some of the big indexes will be around, and that's okay. What to show you how much confidence that Warren Buffett has in his theory. What does he tell you to do? Just buy an index fund and hold it. So is he saying that nobody else is as smart as me, or I'm so stupid I got lucky? And anyway, I'm just not a fan. But I mean, at least Ray Dalio, I will give him credit. I have a friend that worked for him in the very early days of Bridgewater, many, many years ago, decades ago. And at least Ray is willing to put out, like with the principles and some of the things that he's put out there, I think are fairly good. He's kind of evolved into something different. I liked Ray a lot better when I didn't hear him talk, when he was this mystique, amazing manager. It was more fun to try to look at him as the money manager, as now the personality and the elitist that he's doing. I don't think very many people, and he didn't get a very big audience when he was recently in Washington, D.C. A couple more questions here. Yeah, so how do you minimize over trading? That's a discretionary thought, but if you put, this is the thing that I will show you when you get into building and constructing a portfolio on this platform, because not gonna go into any trading thoughts, but relative that thought to the trading platform is constructing the portfolio. You actually, what's nice about doing backtest on this is that especially if you have symbols with long histories, you get a matrix of what's typically going to happen. You'll see in a portfolio, one of the metrics I'm going to show you is how many trades it does per year. And it used to be, we tracked that very closely because of ticket charges and costs around trading. Now that we have zero cost, that's not the element, but we do want to know turnover ratios, things of that sort. And the best thing you can do is, what's nice with the portfolio manager, you can actually, let me leave that up on the screen. It's linktr.ee. I'll put, it'll be in the description when I get done with this. But the point of over trading is, yeah, I don't know what to say with that. I'm a scalper. I've done 1,100 trades in one day. So I'm the wrong guy. I don't know if that's over trading, it's just trading. If you're profitable, I guess it's not over trading. But I think this is my point, and the reason why I'm exposing this product again. I haven't spent much time talking to the public about it, because you really want structure in the entire process, right? I think it goes all the way back. to one of these early screens, right? Systematic trading. Just trying to. There was a screen that popped in my head. Yeah. So this is the point. Is not only do you get all of these elements with the product, but you're actually going to be able to quantify and see how much trading is being done. You're going to be able to tweak, and that's the whole point of the development process, is getting symbols that going through. There's 14,000 symbols, so you're going to have some other methodologies to bring in symbols. We do have a screening service, which I'm going to get reactive here going pretty soon, all those kind of things. So anyway, this is, yeah, I think this is going to be it, folks. There is a manual. There is all that stuff. Yeah, there's all of that stuff. There is. So the next video, like I said, we could go on for hours on this stuff. It's very detailed. It's not that complicated to use, and I think I have this belief that if you don't know enough about what you're following, the hardest thing to do is to follow a black box like this, because you don't see exactly what the buy and sells are. However, if you have my indicators, you can bring up the PPMs and you can say, oh, look, here's a buy signal, and you can reverse engineer a lot of the metrics within the models by having those indicators as well. So you can see exactly what like you'll see a trigger buy for a symbol, you can bring up that symbol and just put on some elements. And my plan is to have all this so you can use the trading view indicators for analysis of stocks that you're holding. There's nothing wrong with intervening, especially at late stages of a trade, of scaling and doing some other things. So yeah, there's a lot to learn here, folks. This is going to be a master class as we go through. And like I said, it's probably, if I can do 2 videos a week, we're looking at 5 weeks, 6 weeks of doing that. So I'll do my best. We'll see if I can get this thing edited down. It went a lot longer. The editing process can be pretty ugly. Take a lot of time consuming type efforts here. Yeah, that's another trap, Michael, is the 0.43 dividend. The most risky stocks in Wall Street are dividend stocks, and because they're trying to pay you to own their stock. And if you go back to the GFC, the Great Financial Crisis, and you look at the stocks that got hit the hardest, they were all the dividend players. They got creamed. I hate when people throw out, well, at least I'm getting paid while I'm losing money. No, you're not. I know, people think you haven't lost money if you haven't sold. Yes, you have. If you mark the market, I think one of my mentors, and we'll finish here, used to say, your job is to look at yesterday's P&L and maintain as much of that today as you had yesterday, or make it grow. If you're doing anything different, then you're probably going to end up out of business. So you can't have declining equity values for very long. It's sort of like the conditions where our U.S. government is. You're running $2 trillion deficits. The days to the end are getting closer every day. You try to do that. We don't have the ability to print money. Hopefully it's a turnaround story. If you own it, I'm sorry. It's a difficult. That's one of the things that I would also hope to bring in this product to you folks, is to be able to, eliminate those kind of points of ownership, because the only point to own anything is when it's bottomed and it's trending. You know, that's it. You know, my old buddy Lou Horowitz, who was president of the New York Futures Exchange back in the day, he used to always say, "The trend's your friend. Never too high to buy and never too low to sell." He used to. It was funny, but the trend is your friend. And what when I bring up my database every night on the channel, what we're looking at is stocks that are trending. And right now, there's 10% of the stocks, 1 out of 10 in our database on a short-term basis that are showing any type of trends. And there's about 20%, 23% right now. I think that number drops tonight, but that are trending from an intermediate standpoint. So markets are in a place where, and this is why I decided to do this, because we did an amazing job in 2020. This is not anything close to the 2020 decline, but I don't think it's over yet. I'm looking at the market up 175. We haven't quite gotten back to the highs that we made on the big spike day. So, you know, we've got a lot of work to do, and this needs to be. There's a lot of things in transition right now. Everything from, you know, the issues with China, you know, we're in a financial war with China. I mean, if you boil down everything that Trump's done, it's all about China. I mean, look, they went down to Panama Canal and said, "Get out of here." They bring up a bunch of hardware down there to talk to the government. I don't know what it feels like if you're Panama and you got FA-18s and other planes flying all around and big ships in the harbor. Yeah, I don't know what that feels like. I guess you want to call that negotiations. Well, I don't know. But anyway, China is the target, and so we'll see what comes out of that. But this is the beauty of this product, and why I'm really going to make an effort to. I've been on a mission since 2020, but I kind of lost it for a while. Like I said, a lot of things going on in my world and in life. Is that this is like a very systematic way to approach the markets and to get capital to grow. This could be a portion of the money that you're trading for stability, and you can still have your trading, money and speculation money in a separate account, But this is going to be a really good way, I think. Anytime I see this database blowing out to where I suspect will be a sub 20% on the intermediate, it's opportunity time, because there will be a lot of stocks that will bottom out, and in the volatility levels that we operate in 2025 compared to 15, 20 years ago even is a joke. So there's a lot of money in this. There'll be a lot of money in this rotation, and that's why I'm spending the time. So 2 hours, how funny. Nice try, Bob, on the 1 hour. Yeah, so Ed Force is correct. Now's a good time to prepare, and that's exactly why I'm doing this. I've been thinking about this for a couple weeks and just talking on my normal live streams that I do. And I'm like, man, we helped so many people over the past couple of decades. In the GFC, we not only got people out, we got people back in, and that's the other thing. If you get the people that are saying you can't time the market, have no strategy, they've tried, but they haven't done it. You can talk to guys like me and Jim Simons and a whole bunch of hedge fund guys, and we already know what the mainstream financial guys, what the mutual funds are telling you. You can't time the market. All of that stuff, we know the truth. There aren't billions of shares trading every day because you can't time the market. Okay, people aren't buying and holding. So even the mutual funds, if you look at the turnover, if you get the trading list every day from a mutual fund, they're not even doing what they're telling you to do. And because they're telling you, we're the manager, we know what to do, and you can look at their performance and see that whole situation. Anyway, folks, I could go on for hours. I love my work. I love this. This product has been a core product for me for since 1998. So this is and a lot of thought has evolved over these years. As I said, I'm a technology freak. Not only that, that's why I'm so deep into AI and some of these other stuff. We're gonna put something together that's going to be really, really helpful. And my plan is, by the way, is that I have a product called Advise with a Z, and that product is going to incorporate all of these concepts that I'm talking to you about. And I'm partially doing this as I'm trying to put together a development team right now to finish this other product, which will ultimately, my goal is, by the way, this is my goal for Advise, is for you to be able to write in a prompt and advise what you want to do for a portfolio, what kind of risk you want to do, and it will design through a prompt through AI exactly what you want, using our metrics, using our database, using our gold mine to mine that out. And this is my next new vision. It's kind of my legacy deal. And not only will it do those things, but if you're willing to go through this questionnaire that I've been working on for about 3 years, it will understand your knowledge, your decision process, and try to match. I call it match.com for the markets, where it will actually give you the ability to, from a personality standpoint, some of us can make certain types of decisions very quick, and others need more time, more information. So it's going to match the strategy. And there's a matrix that I've been building that will match the strategy to who you are, and then it will learn from what you do and help you grow into more sophisticated, more alpha, whatever that might mean. So, and it's going to be ultimately a free platform that gets paid by the order flow. So I'm hoping that people like Robinhood and others will embrace this thing if I can get it done. I don't know how long it's going to take, but the concept's been in works for about 6 years. So that's where I'm going. Yeah, so Michael Anthony, that will probably come out of this. The beauty is you're going to be able to get through some of that stuff. Once I finish this course, you're going to figure that out. There's 14,700 items on our database, so it really comes down, like we see the miners working right now, it comes down to concepts, and I'll show you with AI how you can develop something. I did something really crazy once, last comment I hope, that I took a list of, I went on Google, said, can you give me the projected top stocks of 2025? I haven't done it this year, but I've done it in the past. And it would give me a list of stocks, and it's always by somebody selling a newsletter or somebody, and you can get a bunch of these ideas together. Now what we could do is take a bunch of those ideas, throw it in AI, and ask I have some prompts for looking at fundamentals. You have to use ChatGPT at the moment for that. But looking at probably 4.0 model, but you can go out and ask these questions for it to look at these stocks, and then you can evaluate them, and then you can evaluate them if you have VPM or WaveTech. You can evaluate their statistical significance from the standpoint of how accurate are they, do they work on that stock, all kinds of elements. You're going to learn all this stuff. So keep coming back. We had about 125 people live all the time, so we'll see how this goes. Yeah, and Todd, I know it has, and my goal through these presentations is to take you to the next level and use it in the right way. However, I have said this as well as, and I really would like to see this WaveTech community grow quite large. And the reason for it is to get maybe get the Discord going, or having a blog where we can actually interact and start to collect this data and find out some really good ideas. Because what I've said is the best. I used to tell staff and the people in the original days back in 1998 through 2006, excuse me, is I said our best ideas will come from the field, not from within this room. Otherwise, the context within the firm, yeah, we're smart guys. We all know what's going on. We have a lot of ideas, but somebody out in the field that uses the product in real world will actually come up with the best ideas, and that's been the case. We've gotten some tremendous ideas and things that have been implemented into both philosophy and trading, building portfolios that came from many hundreds and hundreds of investment managers. So it's been a great feedback loop. So with that, I will call it quits. Thank you so much for spending the time with me. I appreciate it. I always, when I get into these things where I'm open source, 2 hours is easy. I can do 3, but I'm going to call it here, as I really want to try to get these data. I may end up just redoing this into a video and editing it, but I still want to do these lives and participate with everybody. Yeah. So Michael, keep hanging out. I'm hoping we'll be able to help folks like you. That's been my goal for a long time. Anyway, folks, have a great weekend. See you Sunday night. Actually, I'll be live on Sunday night. So we're back into the old Kindle Report days at the moment. 8 p.m. Eastern time, Sunday night. I'll see what I can figure out about what's going on these screens. We're kind of flatlined here in the final hour or so. We're at 53.91.50, up 90 handles, up 1.71%. Anyway, folks, have a great weekend. We'll talk to you soon.